If you plan to apply for an Irish D-Study visa for the September 2026 intake or later, the financial requirements have been completely rewritten. The Immigration Service Delivery updated their guidelines on June 30, 2025. They standardized the entire system, meaning that visa-required and non-visa-required nationals must now clear the exact same financial thresholds. This animated scale demonstrates the core of the update, the €10,000 living cost rule. All non-EEA students must prove immediate access to €10,000 for their first year of living expenses for any course lasting over 8 months. You must show this same amount for every subsequent year, entirely separate from your actual course fees. The previous two-tier system, which gave certain nationalities a lower financial threshold, is gone. Every single international applicant now faces a strict, unified financial test before they can enter the country. This chart shows the pro-rated calculation for shorter programs. If your course is under 8 months, the living cost requirement scales down to €833 per month, with a strict maximum cap of €6,665. The Immigration Office uses a rigid definition of immediate access. If your money is tied up in a fixed-term deposit that you cannot break without penalty, or if it relies on the future sale of a car or property, your application will be rejected outright. Beyond your living costs, you also have to secure your seat. Before you even submit your visa application, you must pay a minimum of €6,000 toward your university course fees. The authorities issue a specific warning here: never overpay your tuition before your visa is approved. If your application fails after you pay the full amount, recovering your funds depends entirely on that specific college's refund policy. Having a high net worth on paper is insufficient. The exact liquidity of your cash and the precise timing of your deposits dictate whether your application survives the review process. Roughly 30% of all Irish student visa refusals come down to one single issue: financial adequacy checks. Assessors actively hunt for a practice known as funds parking, when untraceable lump sums suddenly appear in an applicant's bank account right before they apply. This tracks a classic trap. An account balance jumping instantly from €500 to €12,000 triggers immediate warning markers. Assessors look for sudden deposits and loan cycling, where money bounces between relatives to create artificial wealth. To defend against a refusal, every single large deposit must have a clear paper trail. You have to explain the money in writing using official documents, whether that is a formal sanction letter for an education loan or a notarized gift letter backed by a parent's own bank statement. Even the format of your proof is heavily scrutinized. Your bank statements must cover the full 6 months before your application. They must be printed on official bank stationery, and they can be no older than 45 days when the Immigration Office receives them. If a parent or sponsor is covering your costs, the documentation burden doubles. They must pass a capacity to maintain test, meaning they must prove they have enough residual income to support their own household after sending you to Ireland. Avoiding that 30% refusal rate takes months of methodical financial hygiene. Every cent in your account must be tracked, documented, and fully justifiable long before you submit your paperwork. If you are a degree-seeking student enrolled in a Level 7 to 10 course on the interim list of eligible programs, there is a recognized alternative to traditional bank statements: the education bond. This flowchart maps out how the bond works. Operated by Transformate Education, you deposit your €10,000 through their secure portal. The funds are held safely in an Irish trust vault until you arrive in the country. Submitting this official bond receipt with your application largely removes the intense source of funds checks. Once you land and complete your immigration registration, that €10,000 is released directly into your new Irish bank account. By choosing this route, you completely bypass the highest risk factor in the visa review process. To get your timeline right, start your 90-day pre-application checklist early. Confirm your course eligibility, pay your €6,000 deposit, and ensure your 6-month bank average supports the required balances. Navigating this process requires precision, but you do not have to do it alone. Visit myflightoffers.com to read in-depth international student blogs, download financial checklists, and book affordable flight tickets for your journey. If this guide helped clarify your path to Ireland, please hit the like button, subscribe to the channel, and drop any questions you have about the intake rules in the comments below. Rigorous preparation using these exact rules and checklists ensures your successful journey from application to arrival. Safe travels, and see you in Ireland.